Welcome to Mr.M Talks. This channel is updating share market information day to day. The price-to-earnings (PE) ratio is a fundamental financial metric widely used in the stock market to assess the valuation of a company's stock relative to its earnings. This ratio is a key tool for investors and analysts seeking insights into a company's market performance and growth potential. The PE ratio is calculated by dividing the current market price of a stock by its earnings per share (EPS). In this extensive exploration, we will delve into the intricacies of the PE ratio, its significance, calculation, interpretation, and the various factors that influence its utility in investment analysis. Definition and formula: the PE ratio is a valuation metric that measures the price investors are willing to pay for each dollar of a company's earnings. The formula for calculating the PE ratio is expressed as follows. PE ratio equals market price per share / earnings per share, EPS. Components of PE ratio calculation. Market price per share. The market price per share is the current trading price of a company's stock in the open market. This is determined by the forces of supply and demand in the stock exchange. Earnings per share, EPS. EPS, as previously explained, represents a company's net earnings divided by its outstanding shares. It serves as a key denominator in the PE ratio, reflecting the company's profitability on a per-share basis. Example illustration. Let's consider a hypothetical scenario where a company's stock is trading at $40 per share, and its EPS is $2. The calculation of the PE ratio would be as follows. PE ratio equals $40 / $2 equals 20. In this example, the PE ratio is 20, signifying that investors are willing to pay 20 times the company's earnings per share to acquire a share of its stock. Significance of PE ratio. Valuation indicator. The PE ratio is a critical indicator of a stock's valuation. A high PE ratio may suggest that investors have high expectations for future earnings growth, while a low PE ratio may indicate undervaluation or subdued growth expectations. Comparative analysis. Investors use the PE ratio to compare the valuation of different companies within the same industry or sector. It assists in identifying potential investment opportunities and understanding market sentiment. Growth expectations. A high PE ratio is often associated with expectations of future earnings growth. Investors may interpret a high PE as a positive sign, anticipating that the company will deliver robust financial performance. Risk assessment. The PE ratio can be used to assess the level of risk associated with a particular stock. A very high PE may indicate a speculative or overvalued stock, while a low PE may suggest a more conservative or undervalued investment. Considerations and limitations. Economic conditions. Economic conditions and market trends can impact the interpretation of PE ratios. During economic downturns, investors may be more cautious, leading to lower PE ratios across the market. Industry variances. Different industries may have different average PE ratios due to variations in growth rates, risk profiles, and capital expenditure requirements. Earnings quality. It's essential to consider the quality and sustainability of a company's earnings. Extraordinary or one-time events may distort the PE ratio, requiring a more in-depth analysis. Conclusion. The price-to-earnings ratio stands as a cornerstone in equity valuation, providing investors with valuable insights into a company's perceived value in the stock market. Investors use the PE ratio as a powerful tool for making informed investment decisions, understanding market sentiment, and gauging growth expectations. However, it is crucial to interpret PE ratios within the broader context of economic conditions, industry dynamics, and the specific circumstances of each company. A nuanced and comprehensive analysis, considering various factors that influence the PE ratio, is imperative for investors seeking to navigate the complex landscape of the stock market and make sound investment choices aligned with their financial goals. Declaration. Below information is educational purpose only. Please subscribe and support my channel.